Hey, this is Evan Hutchison with Foundation to Cloud, and today I wanted to go over the WIP schedule, the work in progress schedule. So, for construction companies that are working on numerous projects at a time, it's always a good idea, and sometimes you have to do it. If you're getting audited or you're above a certain amount in revenue, you've got to follow the percentage of completion method. But even if you don't have to do that, it's a good idea to do a WIP schedule just because it gives your company, or it gives you a better idea of how your company is doing on a per project basis and an overall basis. So the WIP schedule, it provides kind of a snapshot at a point in time of where your profitability stands on a job-by-job basis. And it can provide assurance that your contract revenue, your contract costs, your underbillings, your overbillings all reconcile to your profit and loss statement. It'll tell you if your jobs are over or they're underbilled, which over time can allow you to have a better idea of what to do moving forward. So it's not only good for seeing where you are, it's good for making notes and figuring out what you can do to improve upon your projects. So I was going to throw in a quick spreadsheet to show you kind of a simple WIP schedule that you can do for your company. In a nutshell, it has to do with well, I'll just pull the spreadsheet up, it might be easier. So this is a messy one. I was doing some work on something similar, so I'm just kind of using this, but I can explain what it all means. Basically, you put your jobs over here, job number 5, job number 7, job number 8, and so forth. And your full contract amount, how much you expect to receive in total revenues, goes in this column. And there's a lot of different styles of spreadsheets to calculate your WIP. This is one of them, so it doesn't have to necessarily look exactly like this, but this should give you an idea. It's a pretty basic one. So you have your total contract revenue with all the grand totals right here. Your total estimated cost right here. Your let's see, your estimated gross revenue right here, billings to date, revenue recognized, and so forth. So what you want to do, so these are basically the numbers you're trying to come up with right here. Your overbilling or your underbilling or your overbilling. So job number 5 is $1 million contract. Your total estimated cost when you do this schedule, you can always adjust it over time, because if you're in the middle of a project and you realize that the estimated costs are going to be more than what you originally anticipated, you don't have to use that original estimate right here. You can always adjust this so that you can come up with a more accurate over or under billing. And I'll explain in a little bit more detail of what these actually are. So your estimated costs go right here. And I haven't looked at the spreadsheet in a while, so work with me here. It might take me a minute to remember exactly why I put these numbers in here. Your gross profit, as you can see up here, is your contract amount minus your total estimated cost. So that's your estimated net revenue, basically, for the job. Your estimated net revenue percentage is just this divided by your gross contract amount. Now, this column right here is, well, no, where is it? Billings? Oh, I'm sorry, billings to date. This is what you've actually received. So for this particular job, you've received nothing. For this particular job, you've received 710 grand. So as you can see, a lot of these are calculations. This column is not. So you put the actual amount you received so far in this column. You also put the amount of costs that you have incurred in this column right here. So when you do that, you're giving it the info needed to create these calculations. So you have you put the total contract amount in here. You put the total amount, your total estimated cost in here. So you've got those at the beginning of the project, which it comes up with this automatically. Then you put in your revenue that you've recognized so far, the revenue you received, the cost that you've incurred. So what you're doing here is you're coming up with your percentage of completion, which creates your WIP adjustment. And your percentage of completion is basically your cost to date as a percentage of your total estimated cost. That's how you start. So your cost to date are $474,000. Total estimated cost for this job is $700,000. So your cost to percentage of completion is this column right here, 67%. You have incurred 67% so far of your estimated costs. Now we take that 67%, and that's our baseline. So we know we've incurred, or no, I'm sorry, we received $678,000 of revenue. The amount that we anticipate receiving, I'm sorry, we received $474,000 of revenue. Sorry to throw that in there. The amount that we anticipate receiving is $1 million. But we've only completed, according to the cost, 67% of the project, because we've incurred $474,000. That divided by the total estimated cost is 67. So in theory, we've completed 67% of the project. Since we've completed 67% of the project, we are going to recognize 67% of the revenue. That's how we come up with that, because we're trying to match revenues and expenses, and that's the way we got to do it on an accrual basis, which is basically what percentage of completion is, or at least it's more accrual than it is cash based. So the revenue that we're recognizing is 67% of the million, which is right here, $678,000. We've already shown on the books receiving, well, in this particular case, we haven't shown anything. This is zero right here. So we need to show $678,000 on the books. The way we do that is, and I'll do a quick journal entry. Well, actually, I'll just do it right now. So 678,271, and you see right here underbilling of 678,271. We've got to go to, and this is QuickBooks. Obviously, you can do it in any set of books. You can do it on a spreadsheet, whatever. But if we were doing it as of 6/30/2017, we would do revenue of, what was it, 670? I'm just going to say 678. I don't remember the exact number. 678,000. So we're recognizing that revenue because we've incurred 67% of the project in costs, and so we need to report 67% of the contract in revenue, and we haven't received anything. And then we put it under the whatever customer it is. I don't know what it is. 123 Broad Street. And then the other side of the entry is an asset. It's called underbilling. So that'll show up in your balance sheet as underbilling, and that's just making you aware that you have not yet billed that amount of, or at least received that amount of $678,000. And so that shows an accurate portrayal of your books, because now we don't see, let's go back to the spreadsheet. We don't see a loss of $475,000 anymore. I mean, you're in the hole $475, that's right. But in reality, you're going to receive this money, and we're figuring out how much you're going to receive based on that percentage. So in reality, your gross profit is actually $203,000 because that money is going to come to you eventually. That's why you're working the project. Here's another one. I'll do this really quickly, just because you might have the idea of it already, but I'm going to do one with some money already being received. Contract amount $1.2 million. Total estimated cost a little over $1 million. So the gross profit is $160,000. The amount of billings you've received are $710,000. The costs so far to date are $613,000. $613,000 divided by the total amount of estimated cost of $1.062 million is 57%. 57% times the contract amount is the amount of revenue to recognize, $705,000. We've already received $710,000, so now we're going to show an overbilling of the $710,000 minus the $705,000 because we've received too much. So on the books, instead of the debit of underbilling, it would now be a credit of overbilling, and we would decrease the income by debiting it. So obviously this is adjusting your P&L to show it on a non-cash basis schedule. So it's not going to be, you can't really use it for cash flow. If you just want to see a P&L cash basis, then that's totally different. But if you want to see where your projects are, I mean, you can't really make managerial decisions based on a cash basis financial statement for a construction company because it's so volatile. There's always bills being sent out before you actually invoice and before you receive the money. So this is a way to kind of figure out where you are at all times. Of course, a whole nother scenario or a whole nother thing we haven't even talked about is allowance for doubtful accounts, which is money you might not receive. But that's another video for another day. We're not worried about that right now. Just showing the basics of trying to figure out how to set up a WIP schedule and how to do it pretty easily. I mean, you might want to do it on a monthly basis. Some people try to do it on a weekly basis. Most people I work with do it on a quarterly basis, honestly, but there are some that do it on a monthly. If you do it on a weekly basis, you probably have an internal accounting team that will handle that. But that's kind of the basics of projects that you are building for other people. It's a little bit different when you're building for yourself, when you own the property and you are when you're developing your own property. And I'll go over that on another video actually. This is probably good enough for now. But anyways, I appreciate you watching, and feel free to let me know if you have questions. Thanks a lot.